Hi, I'm Chrissy,
And I'm Jess.
and this is
Financial Progress.
welcome back or welcome to our podcast. We are going to talk today about predatory payday loans.
Ooh, that sounds bad.
And yes, we actually have a unique situation because Jessica, would you like to share something?
Oh man. Yes. I was 22 years old and I worked for a payday cash advance place. Crazy.
Yes. So we have all the insights right here, and we are
hmm
going to share.
Oh
So,
man.
Jess, can you
hmm
explain a little bit about how payday loans work?
Yes. So a payday cash advance, exactly how it explains, you borrow money and you have to pay it back by your next paycheck. And you have to show proof when is your next paycheck. So people had to bring in pay stubs. So for example, even if we have people who had monthly payments, kind of like Social Security and things like that, they had to show proof and then they would have to pay it back by the following month.
So, can you just describe your role at the company?
hmm Sure. They called us like customer service reps. Not sure why, but what we would do is we had a whole system and people would have to come in with their information. So there was like a list of information they had to come in, make sure they had the ID, they had to make sure they had a bank account, and we had to see proof that they had a bank account. We also needed their pay stubs. So if they got paid every 2 weeks, we needed to see two pays. If they got paid monthly, it will be one. And we will sit there, highlight the important information, put them in the system. And they also had to get a check with the amount that they were borrowing plus the fee. And that was just in case they didn't come back to pay. We had to deposit their check.
Wow. Okay.
Yeah, it was serious stuff.
Wow. So, I know you went into a little bit of detail already, but what criteria did customers need to meet to qualify for these loans?
Sure. There was nothing like major that they needed. It was just bringing all the information. We would lie and say we have to do a credit check, but it wasn't true at all. And we would also, I was told that I had to say that. And then we also had to tell them that if they didn't pay back, it was going to be on their credit report, which that was not true either. Yeah.
Wow, that wasn't true. I always thought that was true. Wow.
No,
Okay.
yes. It was very interesting because after like people didn't come in and pay, we had to make calls and make more calls. And then it'll be like when we deposit the check, it'll be insufficient funds. We had to make those calls. And then for after a certain amount of time, it'll just be withdrawn. And that was it. Like it was done.
S- So what happens if the customer didn't repay the loan?
So if they didn't repay, the first thing we did, so the next day we deposit the check.
Okay.
And if it went through, then the loan would be paid. But if it didn't go through, then they'll go on into like our outstanding list, and then we just had to try to make calls to collect it. And if they wouldn't answer the calls, then I had to make home visits. That
Wow.
was very uncomfortable.
Oh, wow. Home
Yes,
visits.
like knocking
So
on somebody's door, like,
you
"Hello, you owe us money."
so you as a customer service representative had to go make home visits to people who didn't repay the debt. Wow.
Yes,
Would that
and
balance stay the same or would it increase or was there any other fees?
I think the only thing that came up there was the insufficient fee, but other than that, no.
Okay.
Yeah.
Wow.
And I always avoided the home visits. I was just like, no, have you seen me? I'm little. Like, I ain't going to the
That's
hood to collect payments. I did it twice and I was just like, oh no, this is not for me. Even the calls were hard. They'll hang up on me and everything. I'm like, you owe this money. You just borrowed it. But let's be real, a payday loan is very high interest. And at the time that I was doing it, if you borrowed $100, the fee was $19. and they had to pay that back within 2 weeks. And what I constantly see is continuous customers. You don't realize that that happens, but they would faithfully be there every 2 weeks to pay back the money and do the system all over again. So they're borrowing $100 in 2 weeks, paying you $119, and then redoing it again. So it's just like in 1 month they were paying $40 of interest. So the annual percentage rate for that, or the annual percentage rate was that the year would be over 400%. That's crazy. Crazy.
So what that is insane. So what do you think contributed to like the repeat customers?
I would say that they were living kind of like, you know how I mentioned to you that I was like living paycheck to negative paycheck? What was the word? Do you remember the word that you said that it's called?
Uh oh, what was it called? I can't remember.
Darn,
We
that
do this a
word.
lot.
I know.
I always forget
Well,
terminology.
just watching them, I know their income wasn't enough for their expenses.
A budget deficit. That's what
Budget deficit.
Yes.
Budget deficit. I gotta write this on my forehead. Budget
Right.
deficit. So, and I think that they just didn't catch up or they didn't plan for it.
Mhm.
So every time they came in, they were like, well, I can afford this $19 every 2 weeks. I'm just going to keep doing it. And I would see the same people there every 2 weeks. It was so sad.
Yeah.
It was just like, welcome back, Jack. It's nice to see you again. Like,
Wow. So, how did you feel about the impact of payday loans on the customers?
so at that time, let's be real. I was 22. I was in
Mm.
college. I didn't really 100% knew what was happening. And I just needed a job. I had a temporary position and had just got let go, and I was like looking for something, and that came up, and it was close to home, and I was like, I don't know what this is about. So at first, when I started, I had no idea,
Yeah.
and then I think I was there probably a year and a half, if that. In the middle of me being there, they had stopped the payday loan. That's what they called it, and they started calling it a line of credit that you can have for a month, and then that amount was even more ridiculous, and people still came in for that. And at that point I was like, there's something wrong here.
Yeah.
I was like the more I was like learning about it, I was like, this is crazy. Towards the end I was like, I don't even belong here.
Yeah.
Like
And I think
I feel bad giving these out to people.
I think too, like where we grew up, payday loan places were everywhere. And it was so normal. I feel
Yeah.
like for people to take payday loans, you didn't think twice about it. You know what I mean? And
Yes.
that's just until we think about it and really realize what's happening, and it gets people into this cycle of being unable to repay this debt, and they're just in a circle of keep taking out these loans to repay them, taking out these loans to repay them, taking out these loans to repay them, and it's difficult to break out of that cycle.
Yeah. We had to also do a training of like how to sell it. And this, like, their wording was like amazing. Like, but look, instead of paying back in 2 weeks, now you could pay back in a month. And within that month, if you didn't take the whole $1,000 out, you could come back for the rest. It's like we had to like make the words work. And they'd be like, wait, I could take $1,000 out and I could take a little bit at a time and it's not going to cost me anymore. It's like how to sell that thing. It worked, but I felt bad.
Yeah. Now, did the company provide any type of financial education to the customers to kind of like, no, I mean, that's
Not at
the way
all.
they make money, right? Is
Yes.
to keep the customers in the dark
Yeah.
and not know how this really works and what they're
Or how
actually
to
paying.
help them.
Yes, or how
Nothing
to
at
break
all.
out of this cycle.
It was just, I think it was 100 to 500. And then when we switched to the line of credit, it went up to 1,000. So it was more like, you sure you only want $100? You don't want $500? You'll save money in interest because $19 for 100, and then 500 was probably $50. So technically you save money. So it was more like, let's sell you more money. If that makes sense. But yeah, it's because of the more interest, 1955 or something like that. So No, they did not care about financial education.
So how informed were customers about like the terms and conditions of the loans?
We just told them the basic stuff and then handed like a privacy policy, and then, you hope that people just go ahead and read it. But that was pretty much it. It's just here's $100. You're gonna get charged a $19 fee. You're gonna write this on the check. If you don't come in to pay that, we're gonna deposit it, and we just hand them their paperwork, and that's pretty much it. And they have to sign documents. So
When people came in to get the loans, like what kind of reasons were they giving, or did you even need a reason? Like,
they didn't need a reason, but most of the time it was just to pay their bills. Mhm.
wow.
No specifics. Or like you can tell when somebody was just like, I really need this. This popped up. I didn't know what happened. And they would actually come in, pay, and then you'll never see them again. So those were like the ones that just really had an emergency.
So how has your view of payday loans changed since working there?
Oh man. I think more of learning financial education in general. Man, it's a scam. It's a scam. Like at first I had no idea, right? And then just learning how much that $19, like that interest rate is ridiculous. And you kind of like feel bad for people. Like if they had that extra $500 that they kept borrowing, they wouldn't have needed to do it. Right.
Yeah.
But definitely, if I'm not mistaken, I'm going to say probably like 2 months after I left the company, Pennsylvania stopped serving payday loans. I think it became kind of like a law thing, and they're just like, no, we're not doing this no more. So I don't think, if I'm mistaken, that Pennsylvania serves it anymore. And if they do, maybe it's just Philly because they end up closing. But I think it's Pennsylvania as a whole, as a state.
Yeah, because I remember being younger, just seeing so many of those payday loan places everywhere. And I've been back to Philly a couple times and I don't recall like seeing them as much or seeing them at all actually. And I don't know.
Yeah. I'm going to check now because I'm like,
That's
because I remember them having to close down. There's like, nope, this is not allowed no more. It says payday loans are illegal in Pennsylvania.
good.
So
Good. That's so good to hear. But
so it's not everywhere, but
yeah. So wherever you're listening from, hopefully you can break out of that cycle and start to figure out ways to either increase your income or sell things if you need to get ahead, start budgeting. And I know sometimes it's just very difficult. Like some people are coming to, just pay their bills, like you said, and they get caught in this cycle, this trap, and it's very difficult to break out of. And like, what other options do people have if they find themselves in the situation where I can't make ends meet? Like, what options do they
what
have?
can they do, right? And I know that nowadays I feel like we are exposed to more options, even if it's just temporary, like Lyft, Uber Eats, or DoorDash, like things like that. So they're able to catch up. I also feel like using the bank is much easier because it's not, they're not going to charge you 400% interest rate. And you're allowed to get like a line of credit in there. So, and that's, I think normally it's about 7%. So it'll be so much cheaper going that route versus looking for a payday advantage place. Because I know that other states it's still legal in other states. So people could still go get them. But I feel like we have so much more exposure now with getting fast money. It may not be a lot of money, but at least, doing something like that.
Yeah, something quick like, okay, I need an extra $500 next month for my budget. What am I going to do? And sign up for Uber Eats a couple weeks or a couple nights a week might be able to give you the extra money that you need to at least break you out of that cycle or maybe get you ahead.
Catch you up. And it'll be exhausting.
Yeah.
Because I know some people work during the day, but if it's just something to catch you up, maybe that's something that you can do. Now, if they don't have a car, then that'll be another issue.
That was the other thing I was just going to say. Yeah.
Babysitting, house cleaning.
Yes.
Something.
Yes.
Put it out there.
Yes. Dog sitting.
Dogs. Oh, yeah.
Another thing. that people
Rover.
can do.
Mm-hmm.
Yes, we know a friend who did Rover and make good money on it. And
Mm-hmm.
I pay a ridiculous amount to board my dog when we go on vacation. So
Oh, right. That's another budget expense.
oh yes! Oh my gosh. Oh, I missed that. Yeah, so if you listen to our last episode, we talked about overspending and how I overspent in Puerto Rico. And one of the things that we have to put in our budget is our dog
The
boarding.
dog
And
boarding,
yes,
yes.
he costs $300 to board. So yes,
Wow.
very expensive. So yeah, that's definitely something to look into. If you don't have a car, you can do that in your own home. And yeah, that's something that could help. What did you learn from your experience at the company?
Mm. A few different things, right? I felt like instead of being a customer service, right? Because you're supposed to be serving this customer, I felt more of a salesperson, like them coming in and I had to sell them to get a loan. And it was something that I wasn't happy about doing. It didn't make me happy. And you see the different people that come in and just realize that they're really hurting and we're taking advantage of them. That's how I kind of felt, even though, I'm not the company, but I was working for this company. And it kind of just made me realize I never even wanted to do this myself. Like, do my own payday loans. I would never want to do payday loans. I struggled as a low income family, but never even thought of doing that myself. And I'm glad I didn't go that route because you take out so much money. And the great part is I'm glad they just don't allow this anymore. So
Yes. Yes. I wonder what states do allow it. Maybe we should look that up real quick.
They have online payday loans, by the way.
Oh, wow. Okay.
They got through that. It's 38. It's most of them still.
Wow. 38
Probably should
states
have
that
put
still allow payday loans. And yeah,
probably should have put how many states do not allow.
right.
So yeah, and then there's online.
Also, just wanted to share that if you do need, quick cash for a reason, check with like a local credit union and see what they can offer you. And sometimes they can offer rates that are lower than what would be out there for these predatory payday loans. So just look into that, look into your options, but definitely no one's going to get ahead by these payday loans and the predatory rates that they charge. Payday loans typically have extremely high interest rates, often exceeding 300 to 400%. And this can trap borrowers in a cycle of debt with short repayment terms, which can make repayment very difficult. So if payments are made on time, additional fees are added to the loan sometimes. In Jess's situation, they didn't add that, but some places do charge extra fees on top of that, and that increases the total debt, making the repayment even more difficult. So these loans often target low-income and vulnerable populations who may lack access to traditional banking services and credit. And many times these individuals do not have the capacity to repay these loans, and they get sucked into a circle of borrowing and repaying. So some of these lenders use aggressive tactics, like just mentioned. They go to your home and ask for this money, and that can just add further stress to borrowers. And failure to repay sometimes can also harm your credit, but repaying doesn't help your credit in any way. Whereas a loan from a credit union or another loan that actually reports to the credit bureau, if you pay on time, that would actually help boost your credit, making it helpful to access credit in the future. So, is there anything else you would like to add to close this out? I know this was a lot of information.
Yeah, it is a lot of information. And I just wanted to add that when we used to collect on like our write-off, I said withdrawn earlier, but it's write-off. Those are the people who just didn't pay at all, like for months. They used to like celebrate it. It was like, yes, we got this person's payment. They did what? It was like, and it would be like in our totals at the end that we got a write-off payment. But yeah, poor. They probably needed that money so bad.
Yeah. And I think this is like the reason why we're so passionate about financial education itself, because we didn't know any better growing up. Like we had no clue that payday loans were bad. Like I knew a few people who took payday loans, and
Mhm.
I didn't think there was anything wrong about it. I was just like, oh, that's just what people do when you need extra money.
I didn't know much about it until I started working there.
Yeah.
I had no idea.
It's nice when people can break free from that trap.
Yes.
All right. Well, thank you so much for listening and watching. We'll see you next time.
Bye.
Bye.